All righty, good afternoon. Welcome to Trader Minute. Great to have you aboard. Market here today, a little more eventful than it's been as far as movement. Intraday, opened up down about 6 points. We had about a 10-point sell-off. A little bit of flushing action kind of come in. We've rallied off of those lows. Things have been up, things have been down. A lot of the individual names haven't been this reactionary to the broader market. The things that were up this morning are still up now. The things that were down this morning is still are still down now. So it's not like we're seeing stocks go from big gains to losses and losses to big gains. We're kind of just seeing we're seeing a little exaggeration. Some more selling on the XLE or a little bit of buying, a little relief come off of that. So it's a very low volume market here today, and it's one who has a lot of triggers. Very much like yesterday, we got quite a few triggers, but some of the triggers kind of went away by the afternoon. We're getting some really confirmed triggers kind of coming in here, and some really actionable and tradable things. Okay. Let's take a look here at our candlestick trade AUY. Down about 4 cents. Okay, down about 4 cents, and much less than what I would have expected. I was kind of expecting a little 20 to 25% or 20 to 25 cent pullback here today. You can argue that this is a bearish Harami candle. Overall here with AUY. In general, gold itself, with just a modest little pullback here. Okay, modest little pullback. So we'll kind of keep our eye on this into the close. I don't have any plans to take off AUY here. I still think we get that upside push into the upper Bollinger here to 1050, 1060. And looking to trade it to that level there. While they're not candlestick trades, let's look at Starbucks. Okay, Starbucks you can argue is a Harami candle. And depending on your definition of Harami, you can call it bullish or bearish. Remember, a Harami candle is bullish or bearish depending on which way it breaks out. In the case of Starbucks here, the Harami action, we really want to see it hold 80. But in regards to the Viber, the trend rider, hey, as long as it closes in the upper Bollinger, we're not really going to react to that. If it does close below 80 today and the market itself, looks a little bit weaker, we may just decide to take profit and move on. But overall, this only needs a little bit of a 30-cent rally into the close, and we're still golden as far as Starbucks goes here. Okay. The other position, TLT, which we have for the 100K challenge, continuing to perform for us. We're not getting anything explosive out of it, where we're getting it up $2 in a day or something like that, but we're just getting some steady increase, which is what we want to see here on our march up to 110, and we'll continue to look for that. Okay. Yeah, let's see. TMT, you say DD charts. I'm not quite sure what you mean on that, other than by DuPont. DuPont, very interesting chart here. We'll talk about this type of chart that's happening out there. AK with UAL here. UAL, we're just, this product, a low volume market. There's not really a signal or a read on this. Just yet. If it were to close above 31.50, I'd be much more apt to play it to the upside. But just notice the Bollinger's contracting. Bollinger's contracting. Odds favor consolidation more than anything else. Okay. All right, so today, as far as for the Candlestick Challenge, I'm not going to talk about a brand new candlestick pattern. We looked at one of those yesterday. We looked at potash, okay, and its pattern yesterday. The pattern is still there. The short on potash is still there. I'm probably not going to go and play potash, simply for the same reason I mentioned yesterday. We have a strong underlying support here at 31, and I just don't really want to mess with that in the case of potash. But the candlestick pattern is still there, and still, that breakdown is still quite bearish. The one thing we have to be very careful of in this market is most candlestick patterns are reversal patterns. And we're talking about shorting into a pretty high-flying market. And so, just a little bit more cautious. But let me show you some of the trades that are setting up here today and the things that I'm looking at going after. Let's start with Freeport McMoran. And all of these will deal with a candlestick pattern that we've looked at before. Okay? Freeport McMoran. Got an email this morning that said, Jeff, Freeport McMoran gap down this morning. Why did you not short it? It confirmed the shooting star with the gap down. And my response was, you're right. It did confirm the bearish shooting star with the gap down this morning. Actually gapped down below yesterday's low, which is strong confirmation. But Freeport McMoran this morning also had an analyst come out and upgrade the price targets on it, upgrade the earnings. And that was the reason I mentioned this morning, not going to go after it from the bearish side. It has that bullish catalyst here this morning. I can't trust that gap down simply because the market's gapping down. Okay, and so overall, not able to go after that. And the action on it today just simply tells me there's nothing for me right here from a candlestick pattern standpoint. Okay? Let's take a look at ExxonMobil, and I've talked about the divergence going on between the energy sector, okay, the energy sector and what's going on with the price of oil, and the fact that oil itself, okay, USO, we can see it, has been in a strong downturn, okay, and the fact that the XLE has continued higher. Okay, but the XLE has continued higher. Now, one of the things we saw yesterday is we saw the XLE with a little bit of a spinning doji candle. Okay, and the gap down here today kind of confirmed that. We have what they call an island reversal, an abandoned pattern here, where we have this gap up last week, where we gap up to above 86.5. Trade up there for several days, now gapping back down, pushing back below 86. We have basically abandoned all these buyers up here, and notice the heavy volume. We've abandoned these buyers and reversing. And so the candlestick pattern here on the XLE is strongly bearish and highly ripe for a reversal. And so as I go through, I'm looking and saying, all right, where are these energy stocks? Where can we potentially go and play this? Do we play it with the XLE? Do we play the bearish candlestick pattern on the XLE? Okay, maybe. All right, maybe. But let me show you some of the other options. ExxonMobil. ExxonMobil had a strong update yesterday. Okay, strong update, pushed up to the upper Bollinger Band. And then today gets a gap down and a potential kicking candle if it closes below yesterday's open. Okay. If it closes below yesterday's open. And so ExxonMobil may offer us a great opportunity to play this bearish pattern from a candlestick standpoint and play that lower. Can I enter it right now? No. I want to see candle confirmation. I want to make sure it's going to close below yesterday's open. We get that type of action, we'll look to take advantage of ExxonMobil. What would be the drawback as far as me wanting to not mess with ExxonMobil is, the fact that if oil is pushing back, if oil is pulling back, sometimes Exxon isn't the strongest one to pull back. The big integrateds are sometimes slow to pull back. Sometimes you'll actually see money flow back into the big integrated oils, the Chevrons and the Exxons, because of the lower oil price. Because these guys have refining exposure, the lower earning price isn't going to be as negative on their business as it will be for another company. For example, Halliburton. Okay, Halliburton. Oil at 110 is really good for Halliburton. Oil at 90 Now, it's still good for Halliburton, but not nearly as good for Halliburton. So while Halliburton's earnings were pretty good, the fact that oil pulling back, and if oil stays below 100 and even comes down to the low 90s, that's going to have a negative impact on Halliburton going forward. That will be adjusted. And we have that same kind of abandoned baby TriStar pattern here on Halliburton, potentially signaling a top. And for as good as the earnings were, okay, for as good as the earnings were, I'd look at Halliburton and say, chart's showing something completely different. Chart's showing something very bearish. Do we have an opportunity to go after that? And we do. We can use 52 as a stopping level, and we're looking at 48 as a support level here for Halliburton. Take a look at Helmerich and Payne. Okay. What do we get? We get these little spinning doji candles that oftentimes signal reversals. Okay, we have 2 of them within 3 days, and then today, the bearish breakdown. Okay, we have very similar to what we saw on potash yesterday with the bearish breakaway candlestick pattern. We have a bullish Marabozu, okay, last week, followed by a gap higher on Friday. We trade flat for 2 days, and now today breaking down below the lows of the last 3 days trading. This is a strong bearish breakaway pattern happening from a strong overbought position here with Helmerich and Payne. Okay, here with Helmerich and Payne. So that's another option there in the oil group. Take a look at ConocoPhillips. Okay, very similar action to the bearish breakaway. Okay, very similar action happening from a bit of an overbought position. Okay, Conoco, I've been bullish on. Every time we talk Conoco, we talk pretty bullish on it. Valuations are starting to get a little bit stretched. Fresh break of the 7-day moving average with the bearish breakaway candlestick pattern. Okay, I look at it and I say to myself, okay, you know what? Suppose this market does keep flying higher. If I get into something like this, what's worst case scenario? Well, you know what? We had some bearish breakaway patterns before back here in August. And kind of worst case scenario in my book is that we go flat for 2 or 3 days and really don't get the downside run out. Okay. And so as far as entering these, I'm not as worried as kind of getting this kind of rip your face off rally and being stuck with it. Worst case scenario, I'm probably looking at it going flat and not having any follow through selling, and that's comforting overall as far as if I'm going to look to to potentially get short in this market. Take a look at Neighbors here. Hey, here's Neighbors rallying up, the gap up. Now today a gap down. We have this abandoned candle formation right up here at the top. Okay, this strong abandoned formation again happening within the oil group. Okay, and there's a lot of this. There are a lot of these type of patterns setting up. Here's Oxy. Doesn't have as defined of a pattern. We do have a hanging man candle that happened on Friday, and then some confirmation of the bearishness here today as today's candle action breaks the low of the hanging man. We have some downside action going on in some of the momentum oscillators and whatnot kind of going with it. So, we have some strong topping signs coming into this oil group. And this is kind of my favorite to go after and look to get short from a candlestick pattern standpoint. You'll notice they're all just a little bit of a different pattern. Some of them are bearish breakaways. Some of them are abandoned babies. Some of them are TriStar. Some of them, hanging man. But they're all giving bearish patterns in one way, shape, or form. It's not like we are looking at Oxy breaking down, but everything else is flying higher. Okay? Here's the OG resources. You see the bearish pattern here. The uptick here, the little spinner yesterday, and the gap down today. So it's now not a matter of, hey, do we have the bearish formation? The bearish formation in these oil stocks is here. It's where's the right entry? What's the right entry? Are we going to get a day where you get a little bit of a relief rally that you can sell into? Okay, you remember with AUY, we got the candle trigger that happened, and then it took us 3-4 days to get into it, to basically say, okay, you know what, now Yamana has a really good risk reward there. So in regards to these oils, that's kind of what we're looking at. Here's Anadarko Petroleum, APC. Okay, the bearish pattern here, we basically have a 3 black crows. Not picture perfect, but we have basically a 3 black crows pattern. What have we seen all year with the 3 black crows? Well, we've seen it confirm bearishness, but in the short term, we get a little bit of a bounce, a little bit of a rebound rally that takes it back near the retracement levels. And for Anadarko, somewhere in 95, 96 area is kind of what we would expect. So, a lot of this is because we still have earnings set to come out on a lot of these oil stocks, but we have a consistent pattern that is forming, bearish pattern that is forming within the group. Perhaps one of the stocks I'm most bullish on in the group is Schlumberger, SLB. This one hasn't confirmed a bearish pattern yet. Where Halliburton has, SLB is a little behind. In fact, the OIH, which SLB is part of, the oil services sector, it's confirmed. Even without Schlumberger, it's confirmed the bearish pattern. We have the gap up last week, gap down today. We have the abandoned candlestick pattern, and we have some strong confirmed bearishness here. And so this is the area that I'm most interested in going after from a short side. Okay. From a long side, take a look at St. Jude. Take a look at St. Jude. We have, we've talked about the bullish nature of St. Jude. We have the earnings, a gap down. We had a strong bullish engulfing candle come in on the earnings. We have a nice uptrend. We've kind of consolidated on very light volume. Today it tried to sell off as the market sold, and we're getting a little bit of a bullish hammer come in here. Potentially some bullish engulfing going on. My concern with St. Jude is the volume is just non-existent here today. But, from a bullish standpoint, from a bullish candlestick standpoint, we may have a nice little setup here on St. Jude as we kind of get into the end of the day. Let's take a look at DuPont. Okay, let's take a look at DuPont. And TMT, you asked about DuPont. And DuPont had earnings yesterday. Nice little bullish action on that earnings. And gets a gap up here today. Okay, not able to hold the gap so far. And here's the thing. Stuff like DuPont. It's not going to hold any or break out or hold any breakout if the market is ready to go on a correction. It's just not going to happen. It's going to have another little pullback where maybe it sets a little handle pattern on here or something like that. But they're not going to have these big breakouts if the market is set to correct. So with DuPont, I really kind of want to see it trade above 60.5. To say, all right, what, we have a breakout, market stable, we can go after that to the upside. It's similar to Disney, okay? And we talked about Disney yesterday. The major breakout yesterday above 67.5, but volume absolutely non-existent. Absolutely non-existent. Makes it a little tough to go after. And from a candlestick standpoint, we actually have a pretty interesting harami setting up here on Disney, which, if we get a little more pullback in the market, could be very dangerous. Okay, look, I think in my opinion, the energy sector is going to be a weight on this market for the next little bit. The market may still go up, but I suspect we will see energy underperform, and we'll probably continue to see utilities and staples outperform. And so when I'm looking at upside, candle patterns. I want to look in those staples, want to look in the utilities, look in the medical. When I'm looking at downside energy is where I want to be there. Okay. Yeah, sure, Doug. SLCA. Yeah, Silica Holdings. Oh, man. Uh, this type of spinning doji that happened Thursday last week is really, it's just a really gnarly candle and tough to make any real decisions on because from a technical standpoint, the stock needs to break 32 to be bearish and it needs to break above 37 to be bullish. Well, you have a $5 range there that is essentially consolidation. And to say, oh, you know what, Monday's candle is bullish or today's candle is bearish is very difficult. I think what you're seeing in SLCA is more a product of what's going on in the broader market where a lot of these high flyers are being taken down. There's some profit taking for the first time in a long time, really starting to come into these high flyers, and they tend not to just go up and hit a top. They tend to have another leg up. But if the market does turn, these high flyers have a long way to correct. And so with SLCA, I'd look at it and say, hey, as long as it holds 32, you're probably okay. I'd be nervous about it breaking 34 today, but where it is right now, you're probably okay above 32. Starts to break 32, I get very nervous. Very nervous. Yeah, within the high flyer group, Jay, when you bring up Tesla, and Tesla here, had the bearish breakdown, triggering a trend rider bear signal here today. It does have a little bit of head and shoulders topping pattern on it. The volumes on this all confirm that Tesla has lower to go. And Tesla's like Netflix. If you really look at the value, it's not worth much. But like Netflix, it could still go to 300, but it can go down to 100 just as easy, just as fast, and it's all about momentum. Okay, it's all about momentum. Yeah, Doug, with SLCA, it's finally on a trend down after its big climb up. Oh, are you talking about Tesla? Yeah, Tesla, you actually have a downward trend forming. You have lower highs and lower lows coming in, for the first time on Tesla in a long time. And if you're playing Tesla, it's like playing it on the upside. You know anything can happen, but from a signal standpoint, you're definitely looking at a breakdown here on Tesla. I want to double check earnings here on Tesla, November 5th. So, you're good. You don't have earnings here for a while. I know there's been some news on Elon Musk, the CEO, some stuff going out about how he's hated and not well respected and well liked. That's some opinion piece, but that also may be dragging here on Tesla just a little bit. All right, so bottom line, candlestick wise in this market that we're seeing the energy sector with all sorts of different candles. Okay, and while not every stock is creating the same bearish candlestick pattern, they in general are creating bearish candlestick patterns. One is a hanging man, one's a shooting star, one's a abandoned baby, one's a island reversal. We have a whole bunch of different patterns that are forming, but the common theme is that they're bearish. It matches what we're starting to see with oil falling off a cliff and now really staying below 100 now for the third day. And typically when you hit those key levels, after about the third day, investors are willing to say, you know what, this may last, and they start reacting. And we're starting to see that reaction here in energy today. So it's not a matter of, hey, are these bearish patterns confirmed? Because they're absolutely confirmed. It's now about, okay, what's the best price? What is the best entry on those? And that's what we are looking for here. Okay. Alrighty, so in summary here, with our current positions, not taking anything off of there, We will look to add to some oil here into the close today. We'll see how much the market rallies and gives a little bit of a lift to some of those. And we'll look to go after that into the close. I know Carl has some buy and trend rider signals that are setting up here today that he will look at with you. Overall. PW. So with this downtrend, should we be getting out of our calls? No, and the reason I say that, PW, is we're only talking about a pullback in the XLE. Could that drag the rest of the market down with it? Sure. Okay, absolutely sure. Um, when we are when we're talking about our positions, AUY has nothing to do with oil. It has nothing. In fact, AUY will probably do better if the energy sector corrects and pulls back. TLT will probably do better if the energy sector pulls back and corrects. They have nothing to do with the market up, down. You notice TLT, the market was up yesterday, TLT was up, the market's down today, TLT is up. There's no real relationship. And then Starbucks relationship with oil, there's just none there. In fact, you could argue that as oil goes down, it actually benefits Starbucks because, some of their packaging equipment is cheaper. But overall here, no real relationship with our positions and the price of oil. And while we're in calls on AUY and TLT, they're not necessarily bullish calls on the broader market. You see them both holding up very well here today with the market going down. All right. Well, thanks for hopping on. And again, Carl will be with you here a little bit later today, and then I'll get on about a half hour before the market closes. We'll go and make the best oil trade that's set up out there, and we'll go from there. Take care.